and we're going to go ahead and get started. So as I said, good day and welcome to the webinar. This is Eliminating Your Gross Receipts Licensing Risk. And thank you for coming, especially thank you to all of those that registered early and stuck with it through our early on schedule change. An extra thank you to you. I'm Mark Schlossberg and I'm your moderator. And we're coming from New York, like I said, where it's a nice day, it's a bit cool, and we hope it's just wonderful wherever you are. And we're glad you're here. You're in for a great webinar. We have a good speaker and the hour should go by quickly. And the content today is informative, useful, and I think it's going to be entertaining, which again is quite a statement for a webinar on gross receipts licenses. We have some case studies and stories near the end that I think that you'll find entertaining and enlightening and frankly perhaps even amazing. So you'll want to stick around for that. And our webinar today is sponsored by Business Licenses LLC, and you can learn more about them and their corporate licensing solutions at businesslicensesolutions.com. But let's start off with some housekeeping details. For audio quality, we have everybody's audio set to mute. And if you have questions, type them in. We'll get to as many questions as we can during the webinar. We plan to go for 45 minutes, and we've saved some time at the end. So if we can't get to your question during the webinar, we'll get to it afterwards by email. And also after the webinar, everybody will receive a link to the content plus a bonus gross receipts license checklist. So with us today is Business License LLC partner Doug Starr. Doug has more than 12 years of experience focused on sales tax and business license solutions. And prior to joining Business Licenses LLC, Doug was the CEO of Tax Connects, which is a leading independent sales and use tax compliance firm. Doug was a partner at Tax Partners and had executive roles at Thomson Reuters Indirect Tax. So welcome, Doug.
Well, hello. Thanks for having me.
We're glad you're here and we're looking forward to it. So let's get started. Today's agenda, we're going to look at gross receipts and what's behind the curtain. We're going to talk about licensing triggers, and we're going to focus on some key states and what makes some of these unique. Doug's brought with him some case studies. We're going to talk about risk and gross receipts and how to minimize that risk with process. Then we'll talk about remediation options, and as I mentioned, we're going to wrap up with some questions. So let's start off. We have a couple of quick survey questions for you to test your knowledge of gross receipts tax. And you can see up on your screen the first question, which is how many states allow a gross receipts tax? And a lot of you might know that as a privilege tax. And let's get everybody to participate. The answers are 1 to 10 states, 11 to 20, 21 to 30, or 31 plus. Doug?
Yeah, Mark, I might just add that this gross receipts tax or privilege tax that you hear us talking about is essentially an additional calculation that you've got to make against all or some portion of your revenue. So those of you that are involved with licensing pretty heavily probably have a pretty good idea of the number of states that you have to deal with, but I think you'll find the answer somewhat surprising when we get to it.
Okay, and I see we have a lot of people that have participated. We're going to, let's get everybody in on this, and I'm going to give you just a couple of more moments. All right, last chance. I'm going to count you down. 3, 2, 1. All right, looks like everybody's in. And let's move on to question number 2. Question number 2 is interesting and will take on more meaning at the end of the presentation. Question number 2 is, do you do business in any of the following states? And the answers are Arizona, the District of Columbia, and I know that's not a state, but we put it on the list, Florida, Illinois, or Pennsylvania or Tennessee, and I grouped that one together because we only had spots for 5. But answer this one and it will take on some significance near the end. So let's see how we're doing with that. Wow. Okay. Well,
and Mark, I might add that one of the reasons that this poll is here is we'll get back to these states a little bit later, but it'll be interesting for you to kind of keep an eye on these states, your experience with those states, and see if indeed you've experienced some of the oddities, issues, troubles that we've experienced with our group that handles new filings and renewal filings.
Okay. Well, let's go back to question number 1 and look at the results. And the survey says that,
so the answer is on the gross receipts or privilege tax, how many states actually have that is somewhere between 21 and 30. And for most of you, you may have answered differently than that, but the actual answer is a true privilege tax or gross receipts tax is in 21 states. There may be some other odd taxes that you would group into that, but anybody who had 21 to 30 is an official winner. I'm not sure what prize you have set up for them, Mark, but at least they know I got the answer right.
They have the pleasure of knowing they were right. And for question number 2, just about everybody has done business in one of these 6 jurisdictions. So that's good news because you'll particularly enjoy the stories and the case studies at the end. So Doug, let's move into the presentation itself. Exactly what is a gross receipts tax?
Well, thanks, Mark. I appreciate you running the polls and getting some people involved. It tells me a little bit about the audience, and there's a high level of knowledge here in the audience. So throughout this presentation, feel free using your question box or your chat box to present a question. If it kind of fits with the flow of the presentation, we'll answer it right then. If we have trouble fitting it into the presentation, we'll certainly take the time at the end to answer it. So let's talk about gross receipts licenses and some of the key components. I think the key thing about these kinds of licenses and how they differ from the typical business license that people file is that they're confusing, and kind of the answers on how you're supposed to do it vary. Sometimes, as you heard us say, it's called a privilege tax, and essentially what it is, by just kind of describing it or defining it, is it's a business license that also has a revenue reporting function or element to it. But keep in mind, this is different than most taxes, or especially from sales tax, because it's not a pass-through. This comes out of your pocket, though it feels like a sales tax and may be calculated in much the same way. It's a pass-through, so you got to be careful with it. So think about it from the jurisdictions or the municipalities' perspective. Many of them have asked their states, the local governments, whether they're counties or cities, if we can go ahead and charge this kind of tax to raise revenue in our particular municipality. So they're going to create a rule that's typically convenient and very enforceable for themselves. So you'll have to keep in mind, again, that because they've created a rule in the way that they have, their enforcement will probably be higher than it will on a flat fee kind of business license. So as we said, licenses are really, these kinds of licenses are really allowed by the state, but they are essentially, pushed through by the local governments. Now, one of the things you also have to consider with the gross receipts licenses is that they are different from state to state, and even different from municipality to municipality within a state. Easy for me to say. So it's dependent often on the type of business that you conduct, and we're going to undress that type of business that you conduct a little bit later.
Okay. Well, it sounds like it could be a little bit complex and a little bit confusing. What are the type of questions that someone should ask if they're involved with jurisdictions that have gross receipts tax?
Well, I think there are probably more than I have on the screen here, but this is a great starting list. So the first thing that you'd want to do is make sure that there are hard and fast rules for brick and mortar locations. If you're located in a municipality, what is your responsibility for filing, and what are the rates that you're supposed to file at? Secondly, you may have a sub-question, which is not only do I provide service in that municipality, but I may provide it statewide as well. Is there a difference if I'm providing it statewide? Thirdly, you got to think about how your product or service is delivered. For me to describe all the different variations of that would take up the rest of our time today. But ask the question, if my product or my service is delivered in this fashion, does it create any different treatment? Does it create an exemption? Another thing that you should ask is if you are sending in personnel to perform service on something that you've either sold or that someone else has sold, you may get different treatment on something like that. And I think this might be best described in a couple of examples. So I'll take a couple of simple examples that may seem a bit sophomoric to you, but certainly they'll describe what some of the issues are. So let's assume that you have a retail shop that sells heating and air conditioning in a local city in a state. And certainly that's a gross receipt state, so every time you sell a product inside of your retail facility, you have a gross receipts calculation function that has to go on that revenue. But let's say you also service the air conditioning that you sell, and some of that servicing happens outside of the municipality that you have. There may be different treatments for the service that you provide within the municipality. There may be different treatments for the revenue outside the municipality. It may be the same, or it may be at different rates. So you'll need to ask the questions, especially if you have a service business that's tied to a retail business of some sort. Another very confusing one for folks in some states is a web-based business. So you may be a web-based business up here in New York, but you don't really transact a lot of business in New York. Your transactions are done all over the country. And let's assume that one of your big lines of business is to sell some sort of promotional t-shirt for a large, Fortune 1000 company. What you'll do is prepare 5,000 t-shirts, put the slogan on the t-shirt, send it off to wherever they're having their big shebang out in Arizona or wherever it might be, and they receive the t-shirts, they've paid you from headquarters, which is in Florida, and distributed the t-shirts there in Arizona. Well, the long and short is, although this isn't the case in Arizona, in some states, you may very well have a responsibility to have a business license just to ship those t-shirts into Arizona, and as a result, the revenue that you derive from that transaction that ended up showing up in Arizona or whatever the state is may indeed be subject to a gross receipts or a privilege tax.
So Doug, wait. So there are places where I could be an internet company, I can make a sale and need a business license to deliver my goods to my customer?
Yeah, and
Really?
Though it is somewhat unusual, it is not pervasive, but it's usual enough that many companies will make this mistake and they'll find out about it after the fact.
Wow. Okay. So from the poll, we know that there are over 20 states that allow gross receipts tax. And which states are those?
Well, let's take a look at them. So, and I'm not going to take your time, folks out there on the line, to discuss each and every state, but you're going to see that I've got these grouped in a couple of groups. The group that's in the standard black print, and then the group that's in the red print. Obviously, the group that's in the red print represents that group that we all took a poll on a little bit earlier, and these are some states where you've got some unusual situations that even for gross receipts tax may put you in a position of really being wary of what you have to do to get your gross receipts or privilege tax correct. The second thing that you've got to remember is that while those may be more difficult and may add complexity to the licensing and the renewal of the licensing, many companies will look at states and create a red list like this for themselves and say, if I've got the chance to avoid having brick and mortar in that state or falling into one of those gross receipts rules in that state and locate my activity somewhere else, they may very well choose to do that and would be a wise decision in the long run.
Okay. And so in question number 2, I mean, virtually everybody on this call is doing business with one of these 6 different jurisdictions. So could you just highlight what some of the issues are for us?
Sure. Let me elaborate on what we've run into and why these hit our print them in red list. Let's look at Arizona first. Arizona has an unusual condition where I call it double dipping, where you may go out and say, okay, I'm going to, I file at the state. The state tells me I also have to file with the county. So I go to my county, file with the county, get my license through the county, and then I start conducting business. But what you didn't get told was that in some of the localities, you may also need a license in the city in which you're conducting business. So you've got licenses at 2 different levels, and both of them are gross receipts double dippers. So you've got an additional license and an additional calculation responsibility in Arizona that you might not know you have. Looking at DC, well, you might expect it being kind of the hub of our federal government. It is a confusing place to do business. It's a very complex infrastructure, and the filing arrangements in DC are often very difficult. Some of them require in-person filings. Some of them you have to fight through long lines. Sometimes it takes a couple or 3 days to show up in person and get something done. In other instances, if you're able to file through the mail, the return time on that is very, very slow. So DC, I always encourage people to make sure that they understand the rules and that they provide themselves sufficient time to file or renew. Looking at Florida, one county in particular, Miami-Dade, there are just a number of confusing business classifications or categories. And more times than not, if you're in one of the unusual categories, they're going to require you to file in person, and sometimes they're going to require an officer of the company to file. So you've got to be prepared and know your stuff when you're going into Miami-Dade, and make sure that you are able to walk in with the right people to get this done.
So how do you get an officer to show up? That sounds a little tough.
Well, it is complex, but there are many states and even many of the local municipalities have kind of adopted this notion of having a signature card signed in another state and then having it certified.
Okay.
So once you've gotten an officer to sign something that's been certified, you can then take it into the office through a courier or another employee, saving the officer the trip out. Now, I will tell you that a recent example that we had was for again, a very unusual business filing. Even in New York, which was not one of these troubling states, we had to have an officer show up from California in order to get the license taken care of, and the reality was they weren't going to accept an agent or a signature card for that particular officer. Now, it's a contracting business, so it was a little bit different kind of scenario. Let me see if I can talk about 3 others that I'm sure a number of you have experienced, because I saved the best for last, I think. In Illinois, specifically in Chicago, those of you that have done business there know that it is a very onerous process. It's difficult to get to the right people, to get the right information. There's, again, long lines. It's difficult to read through the codes in Chicago and understand what you really need. And then to add to that, once you've managed to miss on some attribute of the license, there is very high enforcement. It's as if they know what you're thinking and they come looking very, very quickly. There have been stories in Chicago with our customers where when they've had a license that was a gross receipts oriented license that was due for renewal, an officer from the city showed up the day following and asked to see the license actually up in place, and if the license was not available, was there to shut the business down. So it's a very high enforcement, high risk area. Just encourage you to have all your ducks in a row when you're in Chicago. In Pennsylvania, I mean, the rates are just very difficult there. And, so you've got to go through a number of lines of reading and research to determine what rate might really apply to the transactions or the line of business that you're in. And then when you call to try and get help, oftentimes they're using a vendor or a third party who, in many instances, is less informed than you might be about the licensing requirements and the restrictions. So again, that's another one of those where you want to make sure you've got an expert weighing in if you're going into Pennsylvania, into some of those municipalities. And then finally, Tennessee is another double dipper. They've got county and city licenses, not everywhere, but in enough places that you've got to check every time you get into a county. And then you add to that the difficulty of, depending on your line of business, you may very well need to have a bond in order for your business license to be official. So it's some unusual rules and things that we really wrestle with as we deal with these particular jurisdictions. And as you might suspect, when you're dealing with somebody like this or any one of the 21 on the list, it just creates additional risk for a business.
Okay, so Doug, you mentioned risk, and that's a pretty big word to throw around when you're talking about business licenses. I mean, are we talking about material risk?
Well, I mean, that's a good question, because risk is in the eye of the beholder, isn't it?
Yep.
So let's think about it in terms of tax for a moment. Because most companies, quite frankly, and I don't mean to offend anybody on the line, but most companies kind of look at business licenses as just one of those necessary functions that goes on, and it's not something that they put at the top of the list as they do with income tax to try and manage the rates down. So you've got to think about a gross receipts or a privilege tax business license as a tax, and remember, it comes out of your pocket. The consumer doesn't pay it like in sales tax. It's not passed through. It's not something that you're working as an agent for. So think about it as much like you would a sales tax, in that liability can build up over time, because what happens is, if you have not recognized that you have a privilege tax that's due, and you've let that go for 3 or 4 years and somehow have managed to stay under the radar with that municipality, if you're doing big business in a particular municipality, it can add up to a fairly material sum of money. The other thing that can sometimes catch you, it's a little gotcha that'll sneak up behind you, is that the rate might change. And much like sales tax, it's one of those situations where, a 1/4% or 1/8 of a percent or 1/10 of a percent or a particular line of business that now is no longer exempt, all of a sudden turns into, again, a liability that you've got to carry on the books. Think about the calculations too. Sometimes they're difficult to perform because they may be based on very unique attributes. Most of the privilege tax or gross receipts taxes are really calculated in one of 3 ways. It's either a flat fee that's based on a tier. So if you have a particular level of revenue, you're taxed at one rate. If you have a higher level of revenue, you go to the middle rate, and an even higher level of revenue, you go to the next higher rate. So, and that rate may just be a flat fee. So you might have a $500, $1,000, or $1,500 fee that's based on where your revenue tier is. The one that we're most familiar with is just a flat percentage of revenue. So you've got to calculate what revenue is included, remove the revenue that might be exempt, calculate the percentage of revenue, and actually submit that with your business license renewal, and in order to get your business license reinstated. And again, keep in mind that only some revenue may apply. So I'll just reiterate, these aren't run-of-the-mill business licenses. Most everybody can fill out the forms for a run-of-the-mill flat fee $100 business license, and they got their cookie shop in order in business. These generate and they hold risk if you haven't taken care of the issues in the past.
Okay. So let's assume that risk could become material. I mean, what's a business, what's a compliance function to do?
Well, that's a good question, because you've got a lot of options.
Okay.
But let's talk about the 5 or 6 things that may be the smartest way to kind of handle a process and make sure that you don't develop risk over time. Number 1, ID your trouble spots early, and that starts with 2 things to me. One is, look at that list of 21 and make sure that you know the answer in those states, and that you've managed your liability down by following the rules and knowing the rules. And perhaps the best way to do that is to get an expert. And I would venture a guess, if we'd have one of our poll questions as who is a business license or a gross receipts or privilege tax research expert that's on the line, we'd have probably had a few less answer, I am an expert, call me.
Okay.
I mean, it's unusual. Even in large corporations, these are questions that get answered by the attorneys most often. Sometimes the tax department takes on that burden, but more times than not, when we talk to them, the tax department isn't entirely confident that they've figured out the answers. So get an expert and ID the spots where you may have difficulty. Secondly is just research your new potential locations, because before you put a location in play, you may very well have the ability to move it just a little bit out of one municipality into another and avoid a gross receipts responsibility or an easier calculation or some sort of attribute that makes that license just a little easier to maintain. So avoid trouble up front by really evaluating where you might put your location. Third thing is, think about renewals ahead of time. Be on time with your renewals. Don't give enforcers an opportunity to come in and say, hey, you haven't done something correctly, and then start undressing the whole business or put chains on the door or embarrass you in front of the community. Just renew proactively, and that means start your renewals far ahead of time, not when the renewal invoice shows up. Get out ahead of the train on that one. Also, I think you need to understand how to calculate. We talked about that a little bit earlier. It's not only understanding what the calculation is, but then documenting the calculation so that if someone comes back and says, hey, what happened here? This doesn't look correct. In a database somewhere, you've got a documented calculation, not just a bunch of financials that you receive from the finance group. And then check for city and county overlap. Know the double dippers. Make sure that if they're out there, that you're compliant, and if you are unfortunate enough to be in one of those areas, that you know the rates and understand what the issues might be, and that you're paying those calculations properly. And then finally, this is just kind of an administrative detail. I just always suggest that you ought to bookmark the jurisdiction sites, especially these 21, just so that you know where you've gotten the information, what you based your decision on, and then get back there frequently and check for changes so that you don't have rates or some element that changes on you that puts you in gross receipts tax risk mode.
Okay. Well, that sounds good, like good advice. Now, before the webinar, you shared with me some interesting stories that I think really illustrate how far out some of this can go. And I alluded to some of these earlier. Can you share a few of those with us now?
I can. Do we have time to go through these?
We are right on time.
So let's. I'll walk through them, and if we get a little too vigorous on these, call me off, and we'll move through the rest of the presentation. But
okay.
Here are, as I call them, tales from the crypt or the dark side that we're dealing with here in our business. We have a client that's a multi-state fast food chain, and they were unfortunate enough to have been involved in, or actually have their headquarters in geography that was re-annexed. So long after their headquarters was built, another city came in, had a debate with the original city, and essentially the boundaries were shifted, and now the headquarters for this fast food company is inside of a different municipality. Well, the old municipality didn't have a gross receipts tax, and it was fairly easy to manage licenses. The new municipality did, so obviously the ulterior motive was to have the revenue that might come out of one of these large fast food franchisers. So the net result was the new city suggests to the now re-annexed company that they have a gross receipts reporting responsibility, and that every dollar of revenue that comes through that headquarters is going to be subject to the gross receipts tax. Well, that didn't sit very well with the attorneys, and so they began, negotiating, arguing over the statutes, trying to get it reversed, even tried to get the annexation reversed. And the long and short is that it took over 3 years for them to go through this process, and in the meantime, they refused to calculate and pay gross receipts tax. At the end of all of it, they eventually ended up saying, we just can't fight City Hall on this one. We got to go about it a different way. So the net result was that they had several $100,000 in gross receipts that were now due to this new jurisdiction. And just to add insult to injury, this municipality rubbed their nose in it and charged them about a third plus in both penalties and interest add up to it. So they had to go clean up that prior period gross receipts tax, write a big check, which became relatively material even to this very large company, and then began their process of saying, okay, what we're going to do is we're going to license in each of the individual municipalities with all of our franchisees and company-owned stores so that we can demonstrate or make a case that that revenue shouldn't be coming through headquarters and reduce the amount of gross receipts that they're reporting through headquarters. As you might guess, there is a fairly significant battle going on, and the fast food company expects to win that, but it's been a 4+ year battle for them thus far that's cost them probably close to a 7-figure cleanup. So I think most tax departments would consider that reasonably material. Let's think about another one. This is again a more unusual and uncommon kind of circumstance, but it's just so bizarre, and it can happen, so people ought to know it. And it happened to more than just this convenience store chain, because it involves a municipality that actually went bankrupt for a period of time. So during that time of bankruptcy, there were, people were trying to get into business in the municipality, and some were being granted licenses, some weren't being granted licenses, and people were not processing the licenses. This convenience store chain actually wasn't getting their licenses processed, and said, hey, we're not holding up. We've got a franchisee who's purchased this. This municipality is bankrupt. Obviously, they'll clean it up with us afterwards and issue the appropriate licenses. We filed on time. We gave them plenty of time to do it. And the net result was, when they finally came out of bankruptcy with their organization plan, they went back to not only the franchisee but the convenience store chain with a large penalty and interest bill saying, you guys were operating without a license for a period of time, and we expect to be compensated with this penalty and interest. There was a fight over that, but the long and short was it costs money to defend that. So there's another circumstance where you've got a gross receipts oriented jurisdiction who has a larger P&I claim as a result of this bankruptcy that they first went through. How are we doing on time, Mark? We got time.
Yeah, we have time for one more.
Yeah, this is a fun one. This is a very unusual secondhand dealer, and for those of you that are unfamiliar with that term, secondhand dealer would probably best be described as a pawn shop type of business. So this particular secondhand dealer was not a pawn shop, and if you go to a municipality and suggest that I'm going to be buying used goods and then reselling them, they will almost always classify you as a secondhand dealer, and as a result, you'll have a requirement to go out and get a difficult and cumbersome license called a secondhand dealer's license. So this business is a kiosk-oriented business that takes in used PDAs, cell phones, iPod-like devices, and you have the ability at this kiosk to have the device evaluated, and they will quote you a price at that point, and it will, if you decide to go through with the transaction, dispense cash to you and take the device right at that time. So when they went to these jurisdictions, the jurisdiction said, all right, there's a couple of things that are unique about this business that make us want to license you in a different way. Number one, because there are cell phones involved, and some of those you'll be throwing away, it looks to me like you're a recycler, and so there's a recycling license that's going to be necessary. And then secondly, we believe you're a secondhand dealer because you're buying and selling this phone, although the phone is being sold offshore. You're buying and selling this phone, and therefore you have some very onerous reporting requirements and hold periods that are going to be set up for this. Well, even in the non-gross receipts areas, this particular business had to fight through the kind of the business characterization that was being dumped on them. So as a result, they had to really get attorneys involved to be advocates for them to say, no, it's really not a recycling business. No, it's really not a secondhand dealer according to the codes in this particular jurisdiction, so we shouldn't be subject to this kind of privilege tax or this kind of licensing that was associated with it. And, you know, the beat goes on as they continue to expand. Obviously, what they've got to do is make sure that they're applying appropriate advocacy to the licensing up front to make sure that they don't have themselves stuck with unique or onerous licenses that they don't really need.
Well, Doug, those are great stories, and I think what I like about them is they really illustrate that, you know, you think that this is straightforward, but you really never know what might happen, especially in these instances. Also, I want to comment that we're getting questions coming in, and I appreciate that, and we'll have some time, so keep those questions coming. But Doug, now let's say as a company, let's assume the worst, what do we do as a company if we're out of compliance today? What are the remediation options?
Well, there are a number of options, and I'm sure that tax, legal, and regulatory departments have had to wrestle with this in other areas of tax or other regulatory areas as well. So let's think about it, because you really have, as a business, now and again gotten yourself in hot water. It may be relatively insignificant, it may be very material, but you should treat all of those with the same care and concern, because even the insignificant ones can turn material over time. So I would think about it much like you do with tax. What you want to do is think about, how do I solve this problem as quickly as I can so that I don't get deeper and further investigation. So here's the problem with these gross receipts and privilege tax licenses. Number one is, we all know that across just about every state and local tax category, that municipalities, jurisdictions, whatever you want to call them, are, you know, struggling to raise revenue. And as a result, there is just an increasing rate of identification of problems, and then there's a growing level of enforcement associated with that. So you have to understand that the enforcement that you see today, or even the enforcement that you saw last year, is going to be just a small percentage of the enforcement that you'll see in the coming months and years. So you're better off looking at your problem proactively rather than sitting around crossing your fingers and hoping that you won't get caught. You've got to treat it like a true tax problem. So here's what I'd do. I'd follow these 5 steps, and if you follow these 5 steps and trying to remediate it, you're probably doing the best you can, and we'll get cooperation from whatever municipality you're dealing with. So number one, get proper representation. There are some, not all issues are the same. Some issues are big. You know, as we talked about that reannexing issue, that's a big one. You got to have attorneys and advisors involved so that you've got the, you know, the right approach and the right strategy. Secondly, once you create a strategy, get going on it. And when you get going on that strategy, go across all municipalities, especially if they happen to be in the same state, because the word just gets out. It spreads like wildfire. There's easy ways for people to get access to the information that you've been non-compliant or that there's money to go get at Business XYZ. So make sure that you're coordinating across all municipalities, not just approaching one and then opening yourselves up to a sucker punch that comes from another one in a neighboring community. Identify what you need to be compliant. Make sure you've got a checklist, get everything that you need, and, you know, certainly you're going to have to negotiate with the licensing authority to make sure that you're you know, limiting what your risk might be or limiting what your payout might be. And then in the meantime, kind of a nice, yeah, but you ought to do this always, is properly display the licenses that you do have. Show where you are compliant so that you've got some sense of you're just not some rogue business who popped up somewhere and is trying to take advantage of the tax base in that community.
All right, and that's good stuff, Doug. We had a question that came in about cell phones and refurbishing, and I have to admit that I mishandled that question and it's gone. So if whoever submitted that, if you could send that back in, that would be great. But back to you, Doug. You've covered a lot of ground here. Can you wrap that up for us?
I can. I think it can be reduced to, 4 fairly straightforward points. When you're dealing with a gross receipts or privilege tax municipality or potential licensing in one of those municipalities, thoroughly do your research, and not only on your new locations, but make sure you're researching your existing locations and that you don't have some sort of financial risk festering in the background. Secondly, kind of in line with that, be proactive with your filing and with your renewal process. Make sure that you get out ahead of the dates when you're going to go into business initially, and then make sure, especially with these gross receipts licenses, that you're out ahead of the renewal process, because you do have to have other people in your business involved. If you are simply a licensing administrator for your company, and you've got a privilege tax or a gross receipts tax calculation that has to accompany that business license to give you the ability to continue to do business in that municipality, you've got to have some time to do that calculation and make sure your calculations are right. So get out ahead of it. Be proactive and start early. Thirdly, when you go to resolve problems, you identify that you've got them, quickly resolve them. And I would just always advise you to get some expert advice. These things don't solve themselves just with the common thinking. These are very unusual and unique rules. They're designed to build revenue and defend the revenue for the particular municipality. So make sure that you've got an expert that's helping you with that and advising you. And then finally, for all of you that are involved in business licenses, I know I'll get a hurrah to this. You want to keep business licenses off the company radar, because business licenses, when on the company radar, when someone mentions them, it's not because they want to say, hey, Sally, the business license administrator, has done a fabulous job and has gotten all the business licenses that we need on time this year. What they're going to do is they're going to say, hey, Sally missed one. And that one is generally going to be the one that creates the most risk for the company as well.
Doug, exactly right. And thank you for all that good information. We have, amazingly, almost exactly 15 minutes left, so we're going to get to some questions. But I just want to remind everybody that as a follow-up, you're going to send out a gross receipts tax checklist, right?
We will. We'll have that sent out to all the webinar participants sometime tomorrow.
Okay. And so we have some time left. We're going to get to your questions, and if we can't get to your questions during the webinar, we're going to be sure to address them as soon as the webinar is over. And of course, you can contact Doug directly on the info at the screen. Plus, Business Licenses LLC has a webinar channel with all of their 2013 webinars available for on-demand viewing. I think there's one on obtaining a license and controlling your licensing process. So you may also want to check that out if you want some more information. So let's get to the questions. The first question, how are the penalties for gross receipts tax as compared to sales tax?
Well, I mean, what we found is that typically the same penalty and interest formula is applied in a jurisdiction where they might have a sales tax penalty and interest calculation. So if you've got a certain percentage of the calculated shortage that's due, you're probably going to end up with the same penalty and interest calculation for a gross receipts or privilege tax shortfall as well.
Okay. Here's an interesting one. In general, are business license reporting requirements not necessary for companies and industries such as telecommunications that provide services within city limits, that don't have physical locations?
Yeah, that's, I love these kinds of questions because you're always going to find an exception to it. But when you start it with in general, I will answer in general. That's correct. It's not necessary. But there are certain instances and certain kinds of telecom companies who provide certain types of services where it may be necessary. And certainly if you've got any kind of facilities in a particular jurisdiction, there's a likelihood that you have some sort of licensing requirement. And there are some jurisdictions where a particular type of business that you do, even though you're not resident, or in the sales tax world, we called it, have established physical nexus, where you still may have a business licensing responsibility.
Right. And are there federal FCC licensing requirements also?
Oh, well, there always are those, but those are outside the realm of business licensing. But you might treat them much like you do business licensing. It's a required certification or license to allow you to do business in the United States or in a particular area in a state jurisdiction.
Okay, good. Here's a simple one. Is a photocopy of a license acceptable, or does it always have to be the original?
Well, I can see somebody's dealt with the same things we have. Yeah, a photocopy in some instances is acceptable, but generally, if you have a in-person reporting requirement, they're going to require an actual form or an actual driver's license in order to allow the business license to come across. There are some instances we talked about having kind of that transferable signature card where you'll pass it from one state to the other. And in those instances, photocopies of things are accepted typically. But most times, if you've got an in-person filing requirement, you're going to have an original.
Okay. Okay. Another question, next question, and I believe this has to do with remediation. So how successful typically are negotiation efforts?
Well, I think they're, here's how I will describe it, and recognize that most of you saw my background. I come from the indirect tax world, and so everything I look at, I look through kind of through the lens of what I experienced in the indirect tax world. And you know, the issue in indirect tax was when you discovered that you had a problem and you were a public company and you had a Sarbanes-Oxley requirement to make sure that anything material was, you know, essentially identified in your financials, and that you began to work on remediating that. Most companies that are public companies will treat any gross receipts or privilege license issue much the same. So what I've found is that when you are negotiating a business license or gross receipts issue with a municipality, that there's a good deal more negotiation on how far back they look, how they may very well take a formal, an informal negotiation and allow you to settle for some amount rather than looking back for a number of years. But on the other hand, because of that informal nature of how they treat that remediation, they may very well be angry and look back any number of years and grant you absolutely no slack on how far back they're going to look, trying to raise as much revenue as they can. So I think a longer answer to that, if I haven't made it long enough, is that you need to treat it much like you would a voluntary disclosure. And if you've got a situation where you've got some relatively significant revenue for a number of years that is going to feel pretty material and put business licenses on the radar with the company, then I would hire someone to voluntarily contact and negotiate a look-back period and a settlement for you.
As a third party?
As a third party. I think it's easier that way because it kind of keeps the company out of the mix and it allows someone to negotiate with a little more vigor for them.
Okay. Okay. Another question, and I want to add to this a little bit. Do most jurisdictions require you to have a physical location before you get a business license?
In general, that would be the answer. However, as with the T-shirt company example that I talked about earlier, there are jurisdictions where that may not be the case. I'll give you one from the Business Licenses LLC archive. We had a particular jurisdiction where we were filing for licenses on behalf of a client that's across the country from us. And because we were doing a service for that client, we weren't resident there. Our offices are in New York and New Jersey. This office is in the Midwest. This office told us, you can't do business here because you don't have a business license, so you can't get the business licenses for these people that you're out to get the business licenses for, and cut us off. Wow. And required us to appear in person in order to get that business license set up. And we now have a gross receipts reporting responsibility for any of the revenue that we generate, even though we're not resident, not brick and mortar in that jurisdiction.
Wow. Wow.
So even the business license company got
even
stopped.
you.
Uh-huh.
We have lots of great questions, and we have a handful of very specific questions, and we're going to have to research these before we respond, but we do appreciate those questions. And for those, we're going to contact you directly for follow-up. Our next question is, isn't researching just a matter of calling the licensing authority?
Well, yeah, I know I made it sound more complicated than that, so I guess I see where that question's coming from.
Mm-hmm.
And the reason I made it sound more complicated than that is because in many instances it is. There are particular types of licenses, and there are particular states where it is to some degree falling off a log to get it taken care of.
Okay.
I mean, it really is not, you know, it's not a study in nuclear science to get it done. But you've got these 21 states that we talked about earlier, and even some more that you'd add to that, where they've got these obtuse rules, unique business classifications, and unique reporting requirements, a division of revenue, all those things that someone who is not familiar with the fact that those things can occur in a particular municipality may not even think to ask if they call a municipality and say, what are the rules that I'm supposed to have? I'll give you an example. If you call a particular municipality and you say, look, I'm in the telecom business, or we'll even make it a brick and mortar business. I'm in the cookie shop business. And, you know, what do I have to do in order to get a business license? And they'll give you the list of licenses that you need, which may include a health permit and a business license and, you know, depending on what you have in your business, a handful of other permits. But what they won't tell you is that you better keep track of your gross receipts. What they won't tell you is the rate necessarily, unless you're asking for it. What they won't tell you is that there's a double-dipping city outside the county that also wants some share of the revenue. And what they won't tell you is that, you know, the renewal happens on this particular month every year, not 1 year from when you got the license. So you've got a lot of things that if you don't know what to ask, it kind of falls into the category of I don't know what I don't know, so how do I ask the question effectively? So I would, you know, obviously I have a dog in the fight because we provide that kind of advice at business licenses, but I would love to see everybody, whether it's with us or with an attorney or with some internal expert, get an answer to those licensing questions when they first go to get their business license and get their company registered.
Okay. Another question that comes in that says, my company delivers our product to stores in many different states. Is it typical that we would need permits in every city we deliver to, regardless if we have a physical location there?
No, it's not typical. But you can't take, no, it's not typical as the unbending rule.
Okay.
There may be instances where, much like the t-shirt example, where if you're delivering somewhere where you have an obligation to be licensed. And I mean, at some point, if somebody wants to communicate with me after the fact, my information's up on the board. I'd be glad to give you a heads up on where you ought to watch out for that. I don't know it off the top of my head, but certainly it's in our research database, so we could help them figure out whether or not they've got themselves in a situation where they ought to be licensed.
Okay, great. Well, like I said, we've had a handful of very specific questions that have come through that need some research, and we're going to get to those. We have somebody here that mentioned they have a problem with a third party in Pennsylvania, just like you talked about, Doug. So And here's a question about Tennessee. So we'll get to those answers after the webinar when we research them. But we have come to the end of our time, and thanks for all the questions. And again, our sponsor today was Business Licenses LLC, offering automation, consulting, and outsourcing solutions for business licenses. And we've been speaking with Doug Starr, a partner at Business Licenses LLC.
Mark, can I make a
Sure.
selfish political plug here?
Absolutely.
And I apologize for interrupting, but those of you that know us as Business Licenses LLC may see a different logo on the screen as you look at the screen. You see the Business License Solutions logo,
Right.
and essentially Business License Solutions is our large market set of solutions, which include automation, outsourcing, co-sourcing, and advisory assistance. So I'm hoping that didn't confuse some folks.
Okay, so if you're a large market corporate customer and you don't want to work through all the SMB type of information, go over to businesslicensesolutions.com.
Yeah, it's businesslicensesolutions.com. At businesslicenses.com, that's a website that's really designed to service the small and medium-sized businesses. Large businesses will find some places on that site that are interesting to them, but Business License Solutions is what's there to serve that segment of public companies.
Okay, good catch. So everyone, thank you for attending. Again, check your email. Doug will be sending out an email, and we'll be sending out answers to these very particular questions. And there's a checklist coming to you. And if you have any questions, reach out to Doug on his contact information. I'm sure he'll be glad to take questions after the webinar. Thank you for coming, and enjoy the rest of your day.